What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Culby Culbertson. How you doing today, Culby?
I'm doing fine. How are you, Dan?
I'm fantastic, and I'm especially fantastic because my very favorite audience member has joined us today. And why has my favorite audience member joined us here today? It's because this is a chance encounter where I interview commercial syndicators, buyers, sellers, all those types of people. And why do I do that? Well, part of it is because it's the law. If you want to be in compliance, you want to share private deals, you have to have what's called a substantive relationship. And that's what I'm doing. I'm finding out what exactly is it that you do in this industry. But before we get to those fine details, Colby, do you want to introduce yourself a little bit to the audience?
Yeah, absolutely. My name is Colby Culbertson. I'm based out of Dallas, Texas. I'm a manager for Terrydale Capital. We're a transaction advisory firm focused on core commercial assets, multifamily being my flavor. Self-storage is also an asset class that we're very keen on. We primarily place debt and equity. However, we do also operate our own buildings. I myself have a little over 180 units, LP in a couple self-storage deals. I've built a few single-family houses, and now looking to grow my network with other very experienced operators and see how I can be a resource for full capital stack solutions.
Beautiful. I love it. And so the next thing I want to mention, though, is but wait, check your eight. What's that all about? I don't know if you can see through your camera and into the audience screen or not, but under here, can you see if they've got the red subscribe button or the gray one? Can you make that out? And let's just get the jokes aside here. What I really want to talk about is the different motivations that different investors, syndicators, and whatnot end up having. And I found that these are really distinct because it tells you what their why is. So the first reason that some people end up getting their next commercial acquisition because they're trying to preserve their purchasing power. They've got a big enough portfolio that that's how they make their ends meet. But if inflation rears its ugly head, they'll have to make more acquisitions because they're not in the business of selling assets. So that's not what I'm up to, though. What I'm up to is trading time directly for wealth. I've got a background in technology, and the problem with being in technology is as a high wage earner, you're paying more in tax than anybody else. So it hit me. It's like, well, how do I go after deployed capital and get equity in return for my effort? And because that has a much better tax status. So that's what I'm doing with all these kinds of things. But a lot of people are attracted to commercial real estate because they're looking to fast track retirement, which I find is a code word for taking control of your schedule. So maybe it means that you want to work fewer months per year, maybe it's fewer weeks per month, but that's basically what the fast tracking really is. It's to do less work, really. Whereas the last two groups, they're not going to be like that. Like the ultra ambitious types who want to buy their entire hometown, they're going to be hustling into their 90s because they're in it for the generational wealth, making sure that their great grandchildren never have to hold a day job. Whereas the last group, they found a sector of society, or maybe it's animals or the environment or whatever it is, but they figured out you need a substantial financial backing if you're really going to make a huge impact, and that's why they're making commercial acquisitions. So, Colby, for you, which of those five, what combination of them really describe you best?
That was a lot of information. But what I would say, my why obviously is to set up future opportunity for family. I've got a beautiful 2.5-year-old little boy, and I think if I can continue to, you know, purchase more assets, get myself even involved, even as an LP, obviously I can stretch the capital that I have, the experience I have, and have the ability to, produce additional cash flow reduce my requirement from a hands-on perspective and be able to have a little bit more time to either A, do bigger things, or B, do more things with people that I'd rather hang out with, like my son.
I love it. I love it. So the next question I have, though, it's a little bit of a weird one. It's the tolerance for risk assessment. It's a fill in the blanks question. The question is, there are many popular investment asset classes, but I think blank is too risky. What's too risky for you?
I would say hotels.
Hotels?
Hotels are a little bit too risky for me. The reason is because there's so many other avenues right now to serve the same purpose. I think that there's so much ambiguity in the residential space that having just a specific Best Western off of I-35 is not going to exactly get you the return you need. And also, if you're going to an environment today that has rates that are forever moving and not exactly in our favor as investors, your overhead is directly being challenged daily, inclusive of the ability for people to travel because of the same issues. So I think hotels are probably not on the top of my list. We'll probably cover this more so later, but since I'm already here, I would say things like self storage, multifamily, long term fixed options, maybe even a triple net deal, depending on what the caps are. But again, no crystal ball here. If we continue turning the way we are in the world, it's going to be more difficult for triple net investment to show that future valuation.
I just love that. So let's get into the different roles to figure out how you fit in the deal. It sounds like you're a deal finder, but one of the things I like to do, and it's actually for you in the audience, is to make sure that you can effectively communicate on the subject of commercial real estate. So if you go to dandoesdeals.com, you can get your own copy of this die and print it out. And I want you to do that. That's why I don't even ask for your email address, because I want you to be able to show your friends and your family how these different deals go down, who the players are, but more importantly, I want to make sure that you know how my guest fits into these deals. So in every episode of Chance Encounters, I go through all six. So the first role I want to talk about is a repositioner. That's a person who underwrites properties. That's a fancy word for doing the math. And they have to make sure, first of all, that the property is actually making the amount of money that they say it is. The sellers and brokers are saying it is. But the repositioning part is that they're looking for that upside. Where are they going to find it? First place they might look, get more advantageous lending from financiers. Financiers are people who only deal with paper and money. So that's one way that the repositioner can get some upside, but let's assume that that's not where they're going to look. Let's say that they look at the operations. They're going to stop those Benjamins from going down the toilet. But of course, there's more than just unclogging toilets and collecting rents, mowing lawns, taking out trash, all that kind of stuff. There's also a marketing component. That's one of my fortes, and it's because of my technical background in CRMs. And so when it comes to marketing, that's to keep the vacancy rate low. But you have to have some sort of operations piece if you're going to be remote based like me. But anyway, the operations piece is probably not enough upside for the repositioner, so they'll often need a contractor team to do a value add or the renovations, if you want to call it that. But the idea is that way the next tenant will be happy to pay more in rent than the previous one. There's your upside. But if you're like me and you're from the internet, then the repositioner is also going to need a local, somebody who can be there in an hour or so, because that's not going to be me. I'd still be stuck at the airport, so that's not going to work. But when the repositioner has figured out the team and the property, they turn around to the financier and they say, hey, I got this property that I really want to buy. It's 350 units. It's tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you want to lend me for this, do you? And the financier is going to want to know one thing that I haven't mentioned yet, which is, who's the KP? And what's that all about? Some coaching programs, they really gloss over that part. And what it's all about is if you want to be eligible for a commercial loan, then somebody in the fold has to already own a similar asset, or the answer is going to be no. And on top of that, you also need a certain amount of liquidity. And then the other thing you need among the owners is a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So Culby, as far as your core competencies go, it sounds like you do a lot of deal finder purposes or roles there. Where do you see your core competencies coming in that you're going to be contributing to your next deal?
Yeah, so one, love that. I think that you pretty much hit every nail on the head without question. what I would say is, given our position in the market, again, Terry Dale, we are transaction advisors. So the first step of anything is going to be the repositioner. We underwrite probably over 25 deals a day. I myself, I manage a team of 5 behind me that are focused on multifamily, mobile homes, student housing, cumulatively 25 easy cash flow models being produced in our walls today. Couple that with the financier, understanding personal financial statements, schedule of real estate, tax returns if needed. If it's bank regulated, obviously agencies are more form oriented, background checks, experience, things like that. So then also too, to couple that with operations and management. Again, I'm an owner operator myself. I got my start swinging hammers doing demos. So, I do wear several hats, honestly, Dan, but I would say, traditionally repositioner and financier would probably be the the double-edged hat that I would consistently wear. But I would absolutely encourage anybody that sees this or any other film to try to wear as many of those hats as possible,
Hmm.
big or small, because every part of those is an ultimate factor to your success. And if you have at least a just surface level ability to understand each of those 6 pillars, you can find a way to find somebody else or whatever to complete that circle. I know that was a long response, but you kind of got my gears turning a little bit with that cube.
Yeah, I love it. Yeah, I was just also without words. That was a fantastic compliment. So thank you for that. My next question, though, it has to do with buy boxes, and it sounds like you've got a pretty complicated one because it's within multiple asset classes. But when syndicators or investors are talking about a buy box or an ideal property, they're usually talking about 3 things. But we're going to have to talk about the full asset type in there as well. Usually,
Sure.
geography is the first one. So that could be which states, which counties, which neighborhood. Okay, that's the geography part. Second thing is going to be the size. If you're talking about multifamily, that's going to be the unit count. Okay, that's how they generally say, okay, this is a small one, this is a big one, that sort of stuff. If you're talking about industrial, then sure, it'll be square footage, but the size is the second thing. The third thing you're going to need to know is class, and unfortunately, they use the same word for 2 different things. One is the condition of the building. So is it old and beat up, or is it new and up to date? And is it just like really bare bones with no luxuries at all, or is it lavish? So that's the first meaning of class. The second
Sure.
one is how the property is located. So it has to do with how good is the school districts and what's the crime rate like. And both of those two, they're rated the same way as grade school. So it'll be like A plus, A minus, B plus, and so on. So Colby, why don't you just take it away as far as like what you're looking for, as far as what people could bring you if it's in their hot little hands or big
Yeah.
hands.
Yeah, absolutely. And again, great subcategories to tackle there. So, one from a proximity standpoint, I would even take that back to your last statement about management. Are you guys self-managing? Do you have a third party? Does that proximity make sense for your boots on the ground? What's your scalability of your ability to, service whatever happens on property? Because let's face it, if you don't have a third party management and you have a property that's above X size, how much availability do you really have to service that with a tenant that's going to stick around, right? So I think proximity is a big factor, and obviously, rent levels, expense levels are a big factor to that. Another subcategory too that you mentioned is positioning. Think about schools, capital market activities, job growth. How far is it from the main thoroughfare? Those are all factors that I believe multifamily is probably going to thrive off of, because you're not off a main thoroughfare, people can't go to work. If you're not by schools, families can't really see it as an achievable lifestyle for them to live comfortably. And then, couple that also with class, right? So if you have a class that is a little bit beat up, you are one going to have to put a lot of work into it to be considered stable for market rent, right? If you're getting $1 a foot right now in rent and you got a bunch of doors that are falling off the hinges, I don't know. You're supposed to achieve $1.25 a foot, which doesn't sound like a lot, but when you're talking square footage, that's a substantial increase. It's a few $100 a month, right? For a family that has 2 kids, and living in an apartment like the one that we are purchasing, you have to understand the ability for people to achieve those rents. So I think those are good factors to consider.
I love it. I love it. So my next question has to do with people then. And I love commercial real estate just because it's multifaceted and people are so eager to help build new teams. But at the same time, we all have our own unique skill sets. So we're better suited to help some more than others. And for me personally, because of my CRM background, marketing, and automation, it's the sponsored KPs that I'm always eager to meet up with, because they've already got a foundation where a person like me can really make a difference. Whereas most of the time, people need grunts who can do 80 to 120 hours a week. So Colby, as far as you go, and I don't know if you have any 506B deals going on. If you do, then don't entice investors, whatever that means. But as far as like beginners are fine, or the people on the different sides of the die, who in commercial real estate are you disproportionately well suited to help?
I would say I am suited to help people from getting started to those that have a six-figure balance sheet. You know, I'm partnered on a deal with guys that own about 110 million in assets. I'm also partnered with a couple guys here in the office on smaller deals. So I'd be more than happy to help a greener investor get organized with their personal financial statement, schedule of real estate. We have institutional templates that you can utilize and take with you, and also tax returns, W-2s. There's just a lot that goes into being organized than what meets the eye, and realistically lenders will be more susceptible to inexperience if you're organized. I can't emphasize that enough. At the same token, working with some guys that are a little bit more experienced, we can skip over all that. I can take you directly into a deal that makes a little bit of sense. Trust me, I see enough deals and I underwrite enough deals. I can tell you exactly what we're looking at and how to do it probably within an hour. So I think if there's an experienced investor looking for a group to latch arms with that sees over 100 deals a week, I'm your guy. If you're an investor that's looking to figure out your next steps, how to get organized, what should I be looking at, I'd love to be that guy, and I could help you build and grow to be the next guy. So I think I'd be open to any relationship. And like, again, you're speaking with the manager of the company. I've got 5 guys around me that are chomping at the bit to get some more deals in their hands. And honestly, we have so many deals coming in right now. If you're looking for opportunity, I can show you what we're looking at and how it compares to what you're looking for. And I'd be happy to do that.
Excellent. I love it. And so you found me through LinkedIn. That's a fantastic way to reach me, especially because I got my unique last name. But how about you? Is LinkedIn the best way, or is there a website that's better or something, or how should they do that?
Yeah, thank you for asking. So I would say both. So LinkedIn, Colby Culbertson, Culby, and his last name spelled the same, Cobertson. www.terrydalecapital.com is our website. And my email is very easy. It's cc@terrydalecapital.com, and would be open to any conversation to see how I can help you out.
All right, beautiful. And don't forget, it's a double R and a Y. It's not an I or a single R in
Right.
Terry. So that's really awesome. And then the only other thing that I have to mention is not actually for you, Colby. It's actually for you in the audience, which is if you are experiencing piercing pains through your eyeballs and migraine-like symptoms, it's probably because there's a big, ugly red button right there, and you should get rid of it because it's terrible. Okay, and all you have to do is you just click on it and it turns gray. And the thing that's really cool about that is it means that YouTube will actually start paying for these videos instead of me. And I assume you want that for me, especially because it doesn't cost you anything. Actually, all it really means is my videos will show up on your list of suggestions, but you could feel free and just ignore those. I just appreciate the fact that you spent this time with me, just like Colby. I really appreciate that you joined me today. It's been great getting to know you.
Absolutely. Likewise, Dan. I appreciate your time.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey. Yeah, here's my code. You got your QR code scanner? Okay. Yeah. Oh, yeah. Just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.